Okay, before this explainer ends, I want you to do a quick favor for me. Grab your phone, open your banking app, go to your savings account, and look for just one specific number. Seriously, hunt down that interest rate. Look closely at what it says, because what you're going to find sitting right there in your own app, it's probably costing you hundreds, maybe even thousands of dollars a year without even realizing it. It's kind of one of those things where once you see it, you literally cannot unsee it. So for most people who just have their money sitting in a traditional savings account, and we're talking about hundreds of millions of people here, they're earning somewhere around this number. As of mid-2026, the national average savings rate is a dismal 0.38%, right? That's not a typo. That's not a rounding error. That is the actual average number people are just accepting for their money. But wait, honestly, it actually gets worse. If you bank with one of the massive traditional banks, the ones with the fancy, colorful apps, the free debit cards, and those awful customer service lines where you're on hold for 40 minutes, they are actually only paying their savings account customers 0.01%. Let's just break down the math on this for a second because this brilliantly illustrates the problem. If you leave $10,000 of your hard-earned money in one of those accounts for an entire year, they hand you exactly $1, one single dollar, for letting them hold $10,000 of your dollars for 12 straight months. Now, what's really wild is what's happening quietly in the background. While your savings account was busy earning you that single sad dollar, the silent financial drain of inflation was running at 4.2% over the last 12 months. Meaning, the exact same things that cost $10,000 last year, well, they now cost about $10,420 today. I really want to pause for a second and let the sheer absurdity of this land. Your bank generously gave you $1. Meanwhile, inflation quietly reached right into your pocket and took $420 of your purchasing power. So the bottom line is that while the balance on your screen technically went up by $1, your actual ability to buy things with your money dropped by $419. You didn't spend a single cent, yet you lost the equivalent of over $400. You're sitting there thinking your savings are safe and growing, but the reality? Your bank is literally making you poorer. And honestly, this is the part that should make you genuinely angry. The banks know this. They aren't paying you 0.01% because times are hard or because the economy's struggling. No, they're doing this deliberately because they can. While they pay you pennies, they're taking your deposits and turning right around to lend your money out for 7% on personal loans or 21% on credit cards. It's one of the most profitable arrangements in the history of finance, and it relies entirely on you never ever checking your rate. Let's look at how this builds over time, because it's not just a one-year problem. Imagine you've been incredibly responsible. You've got $25,000 saved up over 5 years. At these traditional bank rates, while inflation just keeps humming along, you will lose the equivalent of over $3,000 in real purchasing power. 5 years of discipline, doing everything right and keeping it safe, and you end up meaningfully worse off than when you started. Okay, take a breath. I know that is so frustrating to hear, but here's the good news. What's the straightforward alternative? We don't need to panic because there is a completely simple solution that fixes all of this. And the absolute best part, it doesn't require investing in stocks, it doesn't require playing the market, and it doesn't require taking on any additional risk whatsoever. It's called a high-yield savings account, or an HYSA. And let's completely demystify this right now. A high-yield savings account is exactly the same as your regular savings account in every single way that actually matters for safety and access. It is literally just a much, much better address for your money to live at. Your money has the exact same safety. It's still FDIC insured up to $250,000, which means the government protects every cent, even if the bank fails. You still get your money in 1 to 2 business days whenever you need it. And nope, no lock-in periods, no withdrawal penalties. The whole shebang is exactly what you're used to. The only difference, literally the only difference, is this massive gap in the payout. While your big traditional bank is paying you that 0.01%, the best high-yield accounts are paying around 4.5%. That is a 400 times better outcome on every single dollar you save. Let's contrast this with the math we did a minute ago. Remember that $10,000 that earned you a single sad dollar? That exact same $10,000 sitting just as safely in a high-yield account now earns over $400 in a year. Same money, same safety, $400 instead of $1. And if we look back at that long-term responsible saver with the 25 grand, Moving that money to a high-yield account results in roughly a $6,000 difference over 5 years. $6,000 just for taking about 10 minutes online to open a new account. It's honestly the closest thing to a free decision that exists in personal finance right now. Now, I do want to deliver a slightly brutal reality check here because full transparency is really important to me, and I definitely don't want to oversell this. Even at these fantastic 4.5% rates, you are barely keeping pace with inflation. With inflation at 4.2%, your high-yield account is really just acting as a shield. That means your real gain is actually just around 0.3%, and I want to be totally honest about that. A high-yield savings account is not some magic wand for long-term wealth generation. For long-term wealth, we need to talk about investing. But a high-yield account, it's the perfect tool for safety. It's for your emergency fund, it's for money you need in the next year or two, and it's for cash that you simply cannot afford to have fluctuate in value. So who should you use? Well, here's a quick look at some of the best options in 2026. You've got places like SoFi offering up to 4.5% with direct deposit, Marcus by Goldman Sachs, Discover, and Ally Bank, all hovering around that 4.2 to 4.25% mark. They all have 0 monthly fees, and they can all be opened entirely from your phone while you're literally just sitting on the couch. Now, right before you go do this, let me share a crucial psychological hack with you. Step 1 is opening the account, yes. But step 2 is keeping it at a totally different bank from where your daily checking and spending account lives. Seriously, do not keep them under the same login. Here's exactly why this works. You want to create a quiet barrier against impulse spending. By putting it at a separate institution, you introduce just a slight bit of friction. You have to log into a different app. You have to wait a day or two for the transfer to clear. That tiny delay protects your savings from the version of you who just had a really bad Wednesday and wants to dip into the emergency fund for a completely non-emergency shopping spree. Out of sight, earning more, and protected from yourself. Ultimately, what you have to remember is this. Banks benefit from your inertia. They design the system this way on purpose. They profit massively from the false assumption that all savings accounts are roughly the same. But as we've seen today, the gap between the worst and best options is literally the difference between going backward every single year and at least holding your ground. I love this quote, and it's the empowering realization I really want you to walk away with today. You worked for that money. It should at least work back. Making this switch today is completely non-negotiable if you care about protecting your hard-earned cash. So let's circle right back to the beginning. Why on earth would you let them pay you $1 to hold 10,000 of your dollars? I want you to go into that banking app right now, look at that terrible interest rate staring back at you, and make the decision to move your money today. Not someday, today. I actually want to see how big this gap really is for our community. Drop your current savings rate in the comments below so everyone can see exactly what these traditional banks are getting away with. Let's expose the gap. And if you want to keep learning how to make your money actually work for you, hit that subscribe button for more of these uncomfortable money truths. See you in the next explainer.